Hello, everyone. I'm Matt Clark, research analyst with Money Markets here with your Bull and Bear podcast. Now, if you haven't already, make sure you do subscribe to our YouTube channel. This is where you're going to find a lot of great features with chief investment strategist Adam Odell, Green of the Fortune's coder Charles Sizemore, and myself each and every week. Check out moneymarkets.com. It is your home for safe, sound, smart, simple, profitable investment information, all for your portfolio. You can set up a watch list of stocks. You can track their greens and ratings performance, and you can do all that for free. We also have our premium investment service, which is called Green Zone Fortune. This is Adam, Charles, myself, and our entire team. We work very hard to give you great in-depth analysis, market readings, and stocks that we feel are going to perform 3 times better than the broader market over a period of time. And it is all for less than a cup of coffee in terms of price. We're going to put up a link up top here, and you can find out more about Green Zone Fortune. Now, I want to move on with today's podcast. Growing up, I was always really fascinated with movies. I grew up in the era, the mid 70s and the 80s, where we had Star Wars, which has always been my favorite, The Breakfast Club, War Games, Good Morning Vietnam in the late 80s. But I was really more enamored with older movies, Sergio Leone's Westerns, and these were and probably still are amongst my favorites. Morricone's soundtracks, all that great. Then there was dubbed kung fu movies I always used to sit on the weekends and watch. And then there was Godzilla. And I don't necessarily mean the computer generated version of Godzilla that we see today. I mean that old school puppet version of Godzilla. Now, in the 1954 version of Godzilla, the beast attacks Tokyo. And you see mass panic as crowds are scrambling for safety. They're running for their lives. They have no idea what's going to happen, and this monster is coming after them, and they don't really know what to do outside of just running and trying to find safety. I only bring this up because this has kind of been a recurring image in my head, strangely enough, over the last week or so, due to recent market headlines. I envision mass panic as stocks dip due to tensions in Eastern Europe, inflation, anyone guessing when and what the Federal Reserve will do to step in and do something. And today I want to tell you that while the market may be down, this really isn't a time for you to panic. Now, the market is down. There's no question about that. There's no denying that. From its high on January 3rd of 2020 until February 22nd of 2022, which would be earlier this week, the S&P 500 dropped about just a little over 10%. That officially put the index into correction territory. Now, if you remember, correction is when a stock or an index drops 10% or more from its previous high. And the biggest thing to keep in mind here is that this is not the first, and nor will it be the last time that the broader market has gone into correction territory. Now, flashback to 2020. From late February 2020 into March of 2020, the S&P 500 dropped more than 30% as the COVID-19 pandemic was reaching its height. Panic was everywhere. Investors could not sell their holdings fast enough and rotate into safe havens like bonds and gold and things like that. And the market paid the price. But even that wasn't the first time that we've seen a market correction. If you look here, in fact, from 1990 until 2020, the market has entered correction 14 times. And that correction was anywhere from 10.2% to 56.8%. Moreover, corrections lasted anywhere from just 13 days to as many as 921 days. The average duration for all the corrections between 1990 and 2020, about 163 days. But you have to consider that 929-day correction period kind of blows that average up significantly. If you take that out, because it's kind of an anomaly, the average correction period was only about 104 days, so roughly 3 months. Now, while the cause of the correction is somewhat simple, you have tensions in Eastern Europe, you have inflation fears, the Federal Reserve and what they're going to do in terms of quantitative easing and easing inflation and tapering off their bond purchases, which they've already done. But if you trade on headlines, you're more apt to look at the situation in Ukraine as the main pain point. However, you'd be wrong to trade on this particular set of events. And we can look to history to see why. In late 1962, the U.S. was in a showdown with the Soviet Union over its placement of ballistic missiles in Cuba. This was known as the Cuban Missile Crisis, and it was about as close to war as two nations have come in the midst of the Cold War. Now, there may be other things beneath that. If you're a conspiracy theorist and you think otherwise, that's fine. But in terms of in the public eye, the Cuban Missile Crisis was about as close as it gets. As a result, both the Dow Jones Industrial Average and the S&P 500 fell into negative return territory, but not quite correction level. After tension subsided, which was about a month later, both indexes boomed by about 30%. Now, the 60s were relatively good for stocks anyway, but so really the Cuban Missile Crisis was just a minor blip on that movement. Now, we can go back to 1956 and see another instance when geopolitics rattles the market. In 1956, Soviet tanks invaded Hungary to put down a resistance movement in that country. It was part of the Eastern Bloc, part of the Warsaw Pact, but there was a younger generation that wanted to break away from communism, so they started an uprising in Hungary. So Soviet tanks rolled across the border in 1956, around early November 4th. Both the Dow and the S&P 500 actually rose the very next day. So tanks roll in on November 4th. On November 5th, they actually jump about a half or 0.75% the very next day. And then they fell about 5% over the next couple of weeks. However, stocks rose again and surpassed highs reached the day after the invasion. They dropped again, but then followed with a 15% uptick into the summer of 1957. Now, is this most recent stock correction going to last long? It's hard to say. I'm recording this early, so it may already kind of be past. I don't know, but we've taken a long time to get there. It's going to take a little longer to get out of it. But is it going to last long? It's hard to say. No one has a crystal ball. I've said this to you before. You can't really look into the future. But if you're looking only at international events, the trends tell me the correction won't last long. In that vein, however, you've got to consider that there's a lot more at play. Like, what will the Fed do about inflation? We have oil prices that are going up. We have, there's a lot of things going on outside of just Eastern Europe, but a lot of traders are kind of feeling a little panic because of Eastern Europe. In terms of other things, there are some things that are kind of priced in, but not completely, in terms of like the Fed tapering off and raising interest rates and whatnot. We've already seen a reversal from growth into value. Value stocks are now outperforming growth stocks because investors are pouring more in because they expect the Fed rates to happen. So it's going to make value stocks more enticing than growth stocks that have more bet on future growth. We've talked about that before in a recent podcast, so you can go back and listen to that. But the bottom line here is that this recent stock market correction should not send you panicking in the streets as if Godzilla is invading your town. Stick to your system. Your stop loss doesn't change. If you have a system in place and you have a stop loss on your investments, that doesn't change no matter what the investments, no matter what the market does, no matter what the investments are, no matter what the headlines are. You stick to that system no matter what. Hold strong. Stick to your plan. And if you're looking for a system, maybe you don't really have a plan, maybe it's kind of up in the air, but you really want to get something more solidified, then I would probably encourage you to check out Green Zone Fortunes. This is where Adam, Charles, myself, and our entire team, we provide you with a wealth of in-depth analysis, research, and stocks that we believe are going to beat the broader market over the course of time. And we have a system. It is a system that we hold to. We buy on signals, we sell on signals, we have stop losses, and we encourage everyone in the program to do that exact same thing. I'm going to put a link up top here for Green Zone Fortunes if you're watching on video, so you can learn more about how to be involved in Green Zone Fortunes. It's all less than the price of a cup of coffee a month, very affordable. You get a ton of research and stocks that are going to beat the market 2 to 3 times over the course of 12 to 24 months. So check that out at your leisure. Now, I want to switch gears and look at the results of our most recent poll question, very much related here. In last week's question on our YouTube channel, we asked what, if any, headlines you were actually using to kind of change how you invest. Now, only about 9% of those voted said that Russia-Ukraine was impacting how they invest. This is a much smaller representation of the broader market, as we've seen with the stock market correction. But more, about 16%, said they were actually looking at the Fed and inflation. This is keeping your eye on the ball. This is kind of the more important thing that we talked about earlier this week in our Investing with Charles video series. Surprisingly, or really not, 46% said they weren't looking at headlines at all, and they were holding strong. And I think that's a good idea. I think that's exactly what you should be doing. Hold to your system. Bottom line, don't try to deviate just because you see wild flings in the market that may push things up or down or a certain way. You buy on signals, you sell on stop loss, and you maximize your gain, minimize your risk, and you hold to the system. That's how it works. So if you do that, I think you're going to be just fine. I want to thank everyone who participated and took in our weekly poll. We do them every week. You can check them out on our YouTube page under the community tab. Now, if you do have a question or a particular stock or sector that you'd like me or Adam or Charles to take a look at, you can email us. The email address is feedback@moneyandmarkets.com. We'll put that email address right down below. You can also comment below on our YouTube channel because we like to do that, as we like to see your comments as well. If you have a question or maybe you have a comment about something going on in the market, anything like that, Love to see it. You can email us feedback@moneymarkets.com, or you can put it down below on our YouTube channel. Also, head over to moneymarkets.com and sign up for our free daily e-letter. We give you safe, sound, smart, simple, profitable investment information each and every day, all to maximize your portfolio. And while you're there, you can check out our proprietary green zone rating system. You can check out all the metrics on thousands of stocks, see how they rate in our system. You can put these stocks on a watch list. Maybe there are potential buy thoughts for you. Put those down. You can track how they move. You can see all sorts of great information for thousands of stocks, all on our website at moneymarkets.com. And by the way, it is free. Just go, when you head to moneymarkets.com, type in the green search bar, type in any ticker you'd like, and it'll pull up all the green zone metrics, its overall rating, how it breaks down by each one of the 6 metrics we use. You got a stock chart, you have fundamental data, any content that we've written about it is all right there at your fingertips, and it is all for free. Now, do want to make sure you check that out. But that's all for me this week. Again, hold to your system. Don't get spooked by headlines. Don't run out in the street and panic. This is not necessarily a Godzilla moment. So just stay true to your system. And if you don't have one, look to us. We are happy to help. Until next time, this is Money Markets Research Analyst and host of the Bull and the Bear, Matt Clark, wishing you all safe trading.